Well, good afternoon, everyone. It's 25 past 3 here on a lovely early summer's afternoon in West London. We're into the American session nearly an hour, and as you can see, markets are off. The S&P 500 off 16 points from yesterday as it climbs, I suppose, this wall of worry. UK inflation this morning was persistently high. I don't know if that's going to have an effect across the Atlantic and the American markets or not, but nevertheless, inflation showing on both sides of the Atlantic that it's far from, and in Europe, that it's far from being transitory. So I've entitled this video, Caution is Advised, and that's the advice on the front page of VectorVest, folks. As we go into the trading day, VectorVest advises caution when buying stocks at this time. And again, on the front page of VectorVest, we can see that two words, up, down. Now, what that means is that the short-term trend of the US market is up, but the underlying trend is down, and we've got a confirmed down. The longest-term measure of the trend on VectorVest has been down for several months. If you don't like charts, all the numbers are on the front page of VectorVest, okay? And we can see in the color guard that the buy-sell ratio has actually fallen, but the buy-sell ratio has been on its knees. So as the market has been going up, the American market has been crawling up over the last few days. It's been crawling up on very, very low volume indeed, very low participation. And that's not a great sign. Okay. The French market's already broken its all-time high. The UK market is, in fact, yesterday it was 1.7% below its all-time high, but the American market, the S&P, was 13% below its all-time high as of yesterday. So the American market's in this case lagging. So if we have a look at the VectorVest composite, this is the VectorVest composite. That's over the last 6 months. This is an equally weighted chart of all of the shares that we follow in North America, some 8,000 shares. And we'll draw this trend line in a little bit more accurately in a second. As you can see, we've got a gap down at the open this morning. Now, what have I got down below? This is the buy-sell ratio, the number of shares on a buy recommendation divided by the number of shares on a sell recommendation. And as you can see, as this market has been pushing up, fighting this wall of worry up, the participation has stayed very, very poor indeed. So buy-sell ratio right down at 0.32. Not quite in a mega oversold. It needs to get down to about 0.25 or below to be mega oversold, and that's where it was somewhere around here. Got right down to 0.2 right at the lows. And many contrarian traders will use that to get in. But this market now rising. If I go to a 3-month chart, you can see that there's I need to try and get the trend line right, but we're sitting right at support on this little trend line this afternoon. So if I put on what I've got on at the moment, let's go back to the 6-month chart. These are the longest term measure of the trend on VectorVest. That's a confirmed up. That's a confirmed down. That was a nice run. And we've been in a confirmed down situation since the 21st of February, and that's kept us out of all of this banking angst that occurred. And we're now rallying, and this market needs to, in fact, do something quite dramatic to give us a buy signal here. So the probabilities would be, unfortunately, for a little bit more pain. So that's not particularly positive, folks, and we need to find some support in this market quite soon. Down below this little trend line, that I think we're probably going to test these lows again. So if I have a look at my dear old friend, the SPX, that's the SPX, and I've put on another old friend, which is my 8-bar stochastic. I was taught the 8-bar stochastic by the chap who, in fact, put together the stochastic indicator, a guy called George Lane. And as you can see, we're seeing the stochastic is right up in the overbought area, and this is pushed up, and that has failed to follow it. So I think that we can quite easily see a sell-off here. I'm not talking about a crash in markets by any means, but a little bit of weakness over the next few days. I have 2 bets running in the American market. I can find them, I think, relatively easily. GDX, which is off a bit today. I've been telling VectorVest customers that I believe that that gold will come off over the next 3 to 5 weeks, and that they should use that 3 to 5 weeks to, first of all, identify gold stocks that they like, and to do their best to try and to buy those into any weakness over the next 3 to 5 weeks. So I have this position. That's the GDX. Stochastic off for a second. We look at it over 5 years, we get a better perspective as to what the share is capable of doing, or at least the tracker is capable of doing. It came off the 78% retracement pretty much to the tick, fighting its way up here. This is a weekly chart, and I think it's probably going to pull back a little bit. I'm going to do my best to try and hold it. I traded this bit before Christmas. That was a really nice trade here, and I got out somewhere about there and only got back in a little bit late. So I'm going to do my best to try and hold that as long as I can. The other trade that I've got is in the QQQs, and it was based on this flag pattern. Technology was outperforming the American market, but we've got quite a worrisome double top here, so it needs to get through that level relatively quickly. If the S&P pulls back a day or two, as I think it probably will, then that won't happen. Now get stopped out. So a long position in this, and I've already taken a little bit of profit on that. My stop's at entry. So if it goes, it goes. If it doesn't go, big deal. I'll get another one. So if we go back to the overall market itself, we can see that we're still off 13 points, and the VectorVest composite still sitting on support. I've got an intraday chart here somewhere. That's the 15-minute chart. I've decided to trade the 15-minute chart now, folks. It suits me a little bit better as I've got older. And I wish I could. People keep asking me how do you do it, and I wish I had some rocket science for them. Just some fairly simple setups. Yesterday, I couldn't resist that outside bar just after the open, and I shorted it, and it went right back to the 21 bar moving average, and I got out there. So it was 10 or 12 points on that, and then I. So this inside bar, inside bars are great, not because they predict the future, but because that you can actually risk your trading. You can actually risk next to nothing to make good profit. But I didn't make any profit there because market went up and then it came back, and the little bugger stopped me out at my entry point. Didn't make any money, didn't lose any money, but that whipped down, stopped me out. I haven't got a position at the moment, and I shall look for a position between now and 5:30, 6 o'clock. So caution is advised, and the advice on the front page of VectorVest is exceptionally good advice. Markets crawling up, have been crawling up on very, very low participation in the US. Be careful out there. Thanks very much. Bye-bye.